bro. They're gonna have to catch the recording, y'all. This is the one I had called out right here for US 30. We coming towards the end of the month right now. And I wanted to tell y'all I did the math on something, right? To be a six-figure trader, right? If your goal is to say I want to do six figures in trading in a year, I want to be able to make six figures in trading in a year. There's 252 trading days of the year. Okay, if you made $500 a day for 252 days, if you just say, "Hey, $500 is my goal for every day," you would have made within 252 days over 100,000 by the end of the year. So you would have
Okay.
become a six-figure trader just on like, and you might be days you do more than 500. It might be those days you do more might make up for the day you don't do 500. You understand what I'm saying? Or make up for your losing day. But if you just focus on, I'm gonna be a six-figure trader and it break it down into days, it's $500 a day.
Slow grind.
$500 a day. So like the slow grind is gonna get you to six figures.
Right. Hold on, I'll do the math
So
here.
do the
How many
math.
days you said?
252 days. Multiply 252 times 500.
126. Okay.
Yeah, it brings it out to over 100,000. So you make your 100,000 by making $500 a day
Okay.
in a
Makes sense.
year. So if you just let that be your goal and not try to extremely go for the goal at one time, like most people go in to try to make the $100,000 at one time, and that could be overwhelming when you don't reach that goal of making 100K at one time. Oh, I didn't make this 100K today, so I quit trading. You understand? Like, oh, I didn't make this 100K in 6 months, so I quit. If you can make that
Right.
100K
Like he
with
said on the video, the
yeah.
guy said on the video he had the days where he wasn't making 100K a day. He felt like a failure because he made 50K a day.
Yeah, that's what I'm saying.
Like
Like,
because he had them 100K days.
so it gives you a false sense of security. So when you have
Mm-hmm.
like you have one big day when you have and you set your goal to the mark of I gotta make $3,000 or I'm a failure. But what about the days you make 100? What about the days you make 350 or 500? If you come out in the market and you make a positive in the market, you're winning. Like the wins pile up over time. You understand?
Right.
Consistently winning over time is what's gonna make you get you to your bigger win. It's compounding. You're compounding your money over time. Every day is not going to be a $3,000 day. Everything not going to be a 5,000. Every day not going to be a 50,000. You understand? Like we did the props. When we first started doing props and FTMO, we was doing 40 and $50,000 days on a
Yeah.
on a fucking 100K account. So every day not like that though. You understand? We didn't realize then that we was like, we was getting those was big numbers, and like I thought that shit was normal.
Right.
Yeah.
We
But you
thought
know
that
what?
that
We're
is
gonna have to go to an island and get an account, get a bank account and an address and stuff so we can get FTMO back and make that FTMO money.
we was doing $40,000 days and $30,000 days, and that was like our normal thing on 100K account. So every day, that's the reason. Like when you see those type of numbers, and then you come back down, and you're not making those type of numbers consecutively, it can feel like you're not winning. So I don't want y'all to feel like y'all not winning when y'all don't see the big numbers. So if just because you don't see the big numbers, them small wins add up. If I opened up a compound interest calculator right now, you'll see like a penny double over time over years over $1 million. If you consistently double your money every day over starting with one penny, compounding it is over $1 million over a year. So the $500 over the course of a year, that's an extra 100K in your account. If you making 30 to 40,000 a year and you making an extra 100K trading, that's a whole extra salary that you just added in. That adds up, especially like living in major cities or even living in a fucking small city. An extra 100K in your pocket is good money. If you just focus on those small wins and compounding them, then you'll get to the next level of I'm trading this. I'm here. I done made you be able to look in your account and see that see that money into your account. Also importantly, when y'all do y'all withdrawals, do something for yourself. Don't do your withdrawal and not do something good for yourself. Or like if you like how he was saying how he had the student that focused his withdrawals on each withdrawal was for something. So he'll be like, I'm gonna withdraw this, and this withdrawal gonna be for my phone bill. I'm gonna withdraw this and pay my phone bill. That way, trading pay for my phone bill, even if
Right.
my phone bill is only $100 a month. If I make that means I'm able to pull $100 out of trading and pay for my phone bill. If my light bill is $500 or because you live in New York, like your light bill could be $500. But if my light bill is $500, trading just paid for my light bill. You understand what I'm saying? Like you take it and focus it on uncovering one thing at a time and not the whole richness over time. Over time, the compounding of those small wins of paying those bills or trading is if you're able to make enough money trading to just cover your rent. If your rent is like $1,000 and you're able to pull $1,000 out the market each month to cover your rent, then trading is paying your rent. You understand? That's what trading is. You're doing it over the wins over time, the compounding over time of making money over a period of time. Yes, you can go in and you can get lucky and get rich in a day. I'm not gonna say it's not that's impossible scenarios, but it's the compounding of those wins over time that makes you a successful trader. As
It seems like those big wins will get addictive.
they are, but
Yeah.
that's what a trading psychology is. That's what your trading psychology comes into play because you're addicted to that win to chasing. I gotta get to that win because I had that big win, so I gotta get to that big win again, and that can be detrimental to a beginner, somebody that's like you, like a beginner trader, and you had that big win, so now you're chasing that big win, and you don't feel satisfied with the small wins in between because you had that big win. You understand what I'm saying?
Hmm.
So it's good to have the small wins. Appreciate the dollar. Appreciate the small wins. Appreciate those small wins because the compounding of those small wins over time is what's going to grow your account. Is what's going to show the growth in your account. Even taking that money out and buying you some dinner. Look, I just made $20 in the market and I just went and bought me a meal from fucking McDonald's. Like it bought me some lunch. You understand what I'm saying? Like you want to see what trading is doing for you. You do it in increments. Instead of your goal being to move out of the goddamn country or to move anywhere or to buy a car or to buy this, make small goals first for your trading.
Right.
I'm gonna take this trading account and I'm gonna use trading just to cover this
He
base.
talking to me now, y'all.
Listen, y'all talking to me too, because I want to leave the country too. But to be honest, let's be all honest. Like it's way you can live out of the country or for what they live here for, what they like. New York to rent a room in New York City is $1,200. If you lived out of the country for $1,200, you got you a maid, you got your 3-bedroom house, your utilities included. They're not checking your credit.
Okay.
It's all beautiful. You understand? So it does depend on where you live. But to get up and just move your whole family out the country, you want to start taking them small things, small bills. This trading today. Trading is gonna cover my gas. Trading is going to cover my cost of transportation. That is just the goal for me to cover my cost of transportation. That's it. Once trading is doing that, then I can add in something else. Now I'm gonna say trading is gonna cover my phone bill. Now I'm gonna add in my now it's covering my phone bill and my transportation cost. And now I'm adding my groceries. It's covering that. Now I'm adding some groceries. Now trading is paying for my groceries, my phone bill, and my transportation. You do it like that in increments. That trip of leaving will come way quicker because you just like it's covering this. You paying for a phone bill. Your phone should the trading should be at least covering your phone bill. $100 a month or $200, whatever the bill is for phone bill, because everybody bills is different. in comparison to what they got. You got Verizon, you probably got a $200 phone bill. Just saying, like they all like I'm just saying most the phone the higher phone companies just saying like if you have a phone bill, if you have internet, let it cover those smaller bills. Pull enough out the market and appreciate the small wins so that it's covering those expenses. So that when you see it doing that, when you see trading covering those expenses, you won't have to chase those big wins. When the big win happen, it'll be like, oh, I just got a big win. Now I can cover some more expenses and reinvest my money too for a return. I can put it in another account. Or I can put it in a savings account to build up for another investment. I can put it into a savings account. I can put it in a IRA. I can put it in an investment account. I can place it inside of a stock to where now that money is a passive income. I can take this money, I can place it into the stock. I can sit down and use the same strategy that I'm using and put this inside of a stock and watch it grow and let this money be paying me a passive percentage. You want to start doing that on small increments though, on a small wins, on a small account, pulling money out so that you can have money to have that see what trading is doing for you. Because if it's doing nothing for you, if you're trading and you're not getting nothing from it, what's happening is you're not gonna have the same tenacity to want to do it. Either you're gonna be mad that you lost so much money that now I got it, I'm in it now. I don't put so much in it, I gotta get something out of it. Or you're not gonna work as hard. It's not gonna be made real to you until you pull something out of it.
Yeah.
I know, Brandon. Yeah.
Hi, Mr.
So,
Brown.
all right, Brown.
Yeah, he's sleepy.
Yeah, he's sleeping. So it ain't gonna be made real until you get something out of it. And I want everybody to get something out of it. But it does like they also even when they were saying inside the video, one of the things that they was touching on was the fact that you can have everything that you need, and a lot of times your mind will be fucking with you because you start thinking about the losses. You revenge trade. You start doing like you gotta kind of feel the same about the losses as you do the wins. It's just all part of the trading. It all goes together. If you disconnect yourself, if you don't go and celebrate too much for the wins, like
Mm-hmm.
you anticipate the wins and just like you anticipate the losses.
My next read, and my next read, I want to be trading psychology. What's that? What's that? Trading psychology? Not trading psychology. Money. What's that book again? Star Money and
Which one?
Psychology.
The psychology of money?
Psychology, money. Yeah,
Yeah.
yeah.
That
That
one is good. That one is good. That I just started reading Fuck You Money.
really.
Yeah, I just started reading that one. I mean
Mm,
that's all got to do with the psychology, like money psychology. So
okay.
that one is good. I'm interested. I've been reading that. I just reread I just reread some Neville Goddard, a Neville Goddard book at your command. Some more focus on the mind. No, 1 second. Yeah. So I finished At Your Command in 1 day. It's a small book. As far as psychology books is concerned, a good one to read is Breaking the Habit of Being Yourself by Joe Dispenza.
Okay.
That was the book he brought out right before the last one. So what that does is, I know they like to tell you that psychology doesn't have nothing to do with anything. Hold on 1 second. So breaking the habit of being yourself, basically, say like what a lot of things with trading is trading is gonna force you to grow. As a trader, it's gonna force you to become another person. Like you can't take the same things as who same habits that you had in life and you take it into the charts. If you were scared to do something, if you were scared like have fear of of something, that fear will show up in the chart. If you have a problem holding on to bad relationships, you have a problem letting go of losing trades. Like that stuff show up in the charts. So breaking the habit of being yourself is let. I need my computer myself. Thank you, sir. Thank you. It's letting go of the person and the traumas that you had so that you can become and step into yourself as your six-figure self, your millionaire self, the person that you're striving to be. So that you can mentally do that, you gotta let go of your own self. And it's letting go of a lot of old habits. And he literally puts it in a perspective of how to do that in short things. It's the audio book. You can get the audio book for free on YouTube. Like you can listen to the audio. It is it's a nice size book. About like let's say like that. But if you it's not something. It's not a fictional novel. It's more of something to do as actionable steps to do in order to get over like the small things in life to be able to let go of your habits because basically it's like a memory. You're basically if you have a memory the memory of just being this person, like you wake up on this side of the bed, you go brush your teeth, you go do this. It's like your mind is basically playing an autopilot without you even realizing because you're just remembering to do this, remembering to do that, remembering to do that. And you got to let go of those memories so that you can become the person you want to go be. Because you're literally playing on autopilot by the time you're 35. You're just, your life is just, your body will respond without you even knowing. To go, like, I eat this every day, so I got to eat this. I do this every day, so I got to do this. So it's a good one to start with. A lot of traders read that book, The Breaking the Habit of Being Yourself. It was actually recommended to me at a trading conference.
What you say it's called again?
The Breaking the Habit of Being Yourself by Joe Dispenza. It's on the full audio book is on YouTube. If you can I got the book after I heard the audio book. Like I listened to the audio book first and then I went and read the book. The book is more detailed because you can see the diaphragms and how he breaks it down. The audio book, they give you the option of if you get the audio book on like Amazon, they give you the option to download the PDFs. But I'm saying like if you want to just start listening to it, it's a good one to listen to. The audio book is good. But if you want like something physical, the physical copy, you can get it on. I'm gonna put the link. I think the link is already in there under the book section. But it's just being able to let go of some of those memorized habits. We went into a whole psychology call today, y'all.
Okay, and that's okay for us to have a psychology course because trading psychology is very important.
Yes, it is. It definitely is. And that a lot of times that be what's keeping us keeping us losing. A lot of times will keep somebody losing would be their own mind without them even realizing it'd be their own mind. So right here on Nas, it's rejecting this area here. This is hold on. So We going it. We ending this month out here. The end of this month is this week. Uh, Next week we'll be in a new month, so
Yep,
we'll
it's the
have a
weekend.
yeah. Sunday we're
Sunday.
going. Yeah, Sunday. So the start of the trading week, we'll actually be marking up a new month's calendar. That's why I was anticipating a monthly high. Like right now, the US 30 has been hovering above right at the midweek area. Right here at this area. No. So I'm still holding this one. I wanted to try to get a position on gold because gold made this buy after I called it, after it came lower. It touched the weekly low and bought back up right here on this candle. Here, it touched the weekly low, made the rejection, and turned around last night. You learning about the charts too, bro? You know. I want to try to get a position on gold right here at the midweek area tomorrow, but it's tomorrow is Friday. Don't try to hold a trade out on Friday. But this is the area where I would look to buy for gold here.
I crashed and burned on that trade.
Well, on gold, yeah, this
Yeah.
look what it did. We got stopped out right here.
Yeah. I was in
Except,
profit. I should have just took the profit and just like closed out.
don't feel bad. Listen, when you up in the trade,
Hmm.
that's why I said make some rules. When you up in the trade, you can secure profits by taking partials or
Right.
closing out part of your trade. Um, or setting your stop loss into profit. This way, if the trade pulls back, you close out in profit. I
Yeah.
set my trades in the profit or break even. Like set it back to entry. This way, if it comes below entry, then it closes me out, and if it comes lower, I'll get a lower entry. That's actually what happened to me earlier on US 30. So for gold, I want to take a buy come come tomorrow. Let me take a buy. But I won't hold it for too long. We ending out the month. We're going into the last month of the second quarter. That's crazy. This year is going by fast. The last month of the second quarter. So I'm anticipating that the high to continue for gold. This choppiness on gold though, right here, that's been happening the past couple of days, back and forth, back and forth. Gold has been moving to the beat of its own drum, right here. They had a small consolidation, broke the consolidation. There's some more consolidating on this right here. This is the high that we're looking for to break here on gold. But tomorrow you can get a short buy in from the midweek area. The 30. If you're not already in, like this was my original entry here. I was gonna enter here when I was looking for the entry for the US 30 because I was seeing that it didn't break the daily trend. Like it's riding that trend line right here. So while it was looking like a sell, it wasn't. Oh, while it was looking like a sell for the past couple of days, or the past day, let's say, it was a pullback. It hasn't broke this trend, the buy trend. And a break of trend is a candle close below the daily trend, like a 4 hour candle closing below this, and we still above the mid month area, which is going to be different next week. I'm anticipating the US 30 to break that monthly high. They just put a whole lot of money into the market between Bitcoin. Trump put a whole lot of money back into the market between Bitcoin and the deals that they're doing behind the scenes. There's a lot of stocks that just jump. I'm gonna put the news article in there for y'all so y'all can see what I'm talking about. After the call, I'm gonna put the news article in. But there's a lot of money that just got dumped in the market. Somebody tried to call themselves calling Trump out because they were saying he basically did that to manipulate the market, to make the market rise again.
This is recent.
This is recent. This is a recent press conference. Recent. But basically saying like, the areas basically the areas that this market is in right now. We had a strong down we had a strong downfall right here from that area on a weekly chart. You look at the weekly, we was already anticipating the sell because it was in this weekly order block. We was anticipating for the market to drop. The drop, how low it was gonna drop, I wasn't like most people wasn't anticipating for it to drop as low as it did. So when the market started pulling back up, it was like, oh, they manipulated the market. It was market manipulation. Trump did that to manipulate the market. That was what everybody was saying. It's like they dropped the market down this low so that they can get a basically a good price for buying, a good price to buy it. Because, but this is also an area where they buy at on a higher time frame. This is also an area where they put their money at. So it's not like a coincidence. Like the news is basically like it's in this area now. Some news is gonna come out for it to react and respond to this area. Right now, we have been having a consistent trend up for some days now. It's likely going to come up into this area, to that weekly, daily order block area over the course of the last month of this quarter. You're likely going to see the market go up. Probably come the end of the the beginning of the next quarter, you might see a pullback. The market usually pulls back during those months anyway, but you're gonna likely see some pullback during those months. And also, it's also gonna come. We got to come up into another sell order block. So where panic and stuff is gonna be created, it's gonna be all this commotion, and they're not gonna act like they don't know why the market is selling. But look, this is just where they take their sells at. It's not like a coincidence. Like, oh my gosh, the market is selling right now. Like, look, this is where they fucking take their sells at. The news is put to react to those areas for the market to sell. But it's not a coincidence that this happening in these areas. It's not like, oh my gosh, I can't believe this is happening. You got to look at it from an analytical point that the market repeats itself and it plays off of human psychology. That's what the VIX is. It measures the human psychology, so they can almost predict when this shit is gonna happen. based off of the fear gauge of the VIX. One more thing I wanted to go over with y'all, besides just the calls. If you're already in the 30, hold it. One more thing I want to look at Bitcoin. Pull back, bitch. Pull fucking back. When it break these levels, it break with a force. But at 8 o'clock, I definitely would have told you that was a sell. You had a lot of indication for a sell on here. You would have got the indication for the break. Right there. Yeah, right here. One entry, it's another entry for a sell for Bitcoin. Mm-mm. This is likely going to come down and retest this order block here. So if you want to get it for Bitcoin for a sell, or where it's headed, that's the area it's sold to. It's down here at this weekly low at that 103 level. Mhm. Also at an order block. Mhm. Right under 103,000. Look where it's coming to for Bitcoin. So I also wanted to show y'all something as far as like looking at an indication as far as what to enter. Or when you're looking at something and you're saying like it's not it's not leaving a certain level. Okay. So now these candles that y'all see here, each candle is an accumulation of orders. Okay. The blue candles represent buy orders. The red candles represent the sell orders. Now, you have to have an equal number of buy orders as you do sell orders. In theory, when you talk about things as far as liquidity grabs or those what they're going to grab the liquidity is also like the open equity, the equity they need to go back for orders that they didn't close when they do those market sweeps and you get swept out of your position. Okay, so that's why you come and see it trace down. What it's doing is closing out a previous order. Okay, so when you're looking at the candles, you gotta kind of determine what order is it going to, what order is this candle looking to close out. Not to overcomplicate things or not to overcomplicate as far as trading, what you already know. These wicks here are closing out previous candle orders. When you see it wicking and you see these long candles, it's closing out this order here, or it's closing out a like look to the left of you to see what order is this candle, is it getting ready to close out. That could also help you determine as far as like take profit. If you don't want to hold your thing to the next order block, where to take profit at. Look to your left to see what candle is this looking to take, what order is this looking to close? What order is this closing out? And you can usually see that like here. I'm going to use this as this current chart right here as an example, right? I'm gonna delete these lines for a second so it can make sense for y'all. Delete everything off right here. So using like the daily, for instance, right here, this is all open equity up here. Was it an order that got closed? Nope, this is an order that got closed out. I'm gonna show you where the equity is. Okay, so here, like look where this candle came to, the high that this candle came to. It came to right here. So it started closing out this order right here. So up here, this order is still partially open. This up here, above that, make this a different color. Up here is your open equity. Because this candle closed out part of this order, part of this sell order here. Over here, up here, is your open equity. Where they can come up and grab this equity before they sell off. This is open equity in the market. All the orders that's not closed out, only sell orders that's not closed out. So it's closing out sell orders as it's coming up. That's why you have to have an equal number of buys as you do sales. They're not going to close it all out at one time. They're going to leave some open orders so that they can come out and leave some room there. But when they want to come and take some money from, that's where they got to take some money from up here. It's usually y'all money that they coming to take on a smaller time frame. When you see those long wicks of them, like it came up here and then reject. Like it come up here to the high and reject. Because what it did is just close out some orders before it sold off. Because it has to have an equal number of buys as it does sells. This candle here was closing out this candle here, closing out these buy orders here. And it left a little bit of open equity down here. Didn't quite close it out. It didn't quite close out this candle. But this is the buy orders that it started closing out. So it can literally come back down, sweep down, grab some equity and go back up. So if you was getting in for a buy at this level, you would pace your stop under the equity that they left. The damn sure didn't close out this candle. It just went and grabbed some of the equity that it left down there Some of the buy orders it left open and came back up. Yeah, see the open equity that leaves open in the chart. It has to be as equal number as buys as it does sell. The open equity, if you can locate where your open equity is in the market, and you can see look to your left and see where what order they're looking to close out, what candle is looking to be closed. You can set your take profit for the top of the candle that they're closing, for the order that they're closing out, and that can be your profit margin. If you're not looking to hold it for a long period of time, look to your left to see what candle that they're closing out, what order that they're closing out. Did that make any sense to y'all? Or did I give y'all too much information or not enough? If you have any questions, let me know and I can further elaborate on that. Like when they leave these candles open, like the reason you can anticipate your take profit is because of the open equity that it leaves in the market. And there has to be an equal number of buys as it is sells. Open equity on multiple different time frames. There's always open equity left in the chart in the market. But when they feel like it, they can come and sweep your ass the fuck out. I'm anticipating this buy to continue on Nas. We don't got a candle close below. Still 4 hour. And it's hovering at the midweek area. The 30. We got it hovering at the midweek here on the 30. And Nas came back to entry here. Where they come from. Yes. I'm set. We have the same weekly and monthly high on Nas because it made a new high. And I'm looking for it to retrace that high. So the stop should be set under the under this order block, under the midweek area. You know, if you're not already in it. For gold, I would say take the entry at the midweek area during London. Right now, we got it just moving sideways. On London, you should see it making that move more towards London. The Bitcoin, It's likely gonna retrace that monthly low. If it rejects the monthly low, then you will get a buy down here. If it rejects the monthly low, because this is the area where it's been buying. That's a buy order block here. So if it comes down here to this monthly low, this is where you want to take your buy at for Bitcoin. And you can set your stop loss underneath the order block. Your TP1 will be the midweek. TP1 will be midweek. TP2 will be the weekly high. So look for it to come back into this daily buy order block here for Bitcoin. And wait for session. Wait for us to get into session. So we should be in a buy for US 30. Should be in a buy for US 30. We should be in a buy for Nas. Bitcoin is not done selling. Um, I wouldn't take a buy in Bitcoin until it rejects out of the buy order block on a daily. You want to get in for us to take the sell to the low, you can. That's just a short. So that would be a short sell. You wanted to take the sell from where it's at to the weekly low, or be a short sell. Where is that? Okay. Yeah, that's for sure. That would be you trading the pullback. Trading it into the low. Um, Not until it's sell on Bitcoin, you'll be doing a short sell. So we'll go take the buy at the midweek. Wait till the first candle of London session, which is a 6 a.m. candle, to start looking, unless it comes to this level and rejecting it. Unless it comes there before then, which it usually don't make this move until like around during London. During London, you can see the direction which gold is going to start moving. And it's already above the midweek. And if you're in US 30, it's hovering around midweek right now, but we're in Tokyo session, so you're going to see it moving sideways. And now, uh, also back at entry. Yeah, entry. And if you have such a your profit to take for entry, you can get another position on Nas right here. And such a stop under the buy order block. It's Friday, unless y'all plan. Tomorrow is Friday, so unless you're planning to hold your trade over the weekend, um, plan to take your profit before by noon, 1 o'clock the latest, because the markets is closing. Unless you're planning on holding your trades. But remember, next week, Sunday starts a new month. So it'll be a new month markup on from Sunday. We're ending out the month. So you might see some action tomorrow. Sometimes towards the end at the end of the month or at the beginning of the month, it usually do a big move. We've seen it like every month. If you've been around long enough, you'll see. So it's the end of the last day of the month and usually the beginning of the month, there's a move. And like a strong move in the market. You can go back and back test that theory. But the books I was saying to get is here inside the Discord. My book recommendations. This is it right here. Um, Breaking the habit of being yourself. I thought I had put the YouTube link in there. To break out of the habits that you do mechanically to start creating more profitable money making habits. This is the one you need. Breaking the habit of being yourself. I just reread this one for a second time. A lot of this is mind hack, but it's in there. I'll drop the link for that book if y'all want it in there. But the link is in there for you to get. But don't hold your trades if you're not planning to hold them over the weekend. Have your trades closed out by the early afternoon. Okay? You don't want to get caught in the last market move orders trying to wait for it to hit profit. Take your profit if you're not planning to hold your trades past tomorrow. Okay? Let's end this week out in profit in the green as we should. Okay? Let's go.
Let's get it.
Get this money.